Hi, I'm Patu from freefincal. In this video, let's take a look at how you can lower your medical insurance costs. I had talked about how buying medical insurance is one of the most difficult decisions in personal finance, and also in a previous article, I talked about how my medical expenses have increased over the years. Medical insurance premium has increased over the years. Sorry, not medical expenses have also increased, but the premium keeps increasing with age, and also if the insurer has a loss, they can even double the premium or triple the premium, and that you can have rude shocks. So it's better to upfront start at a low premium sometimes if you feel the need for it or if you think it's too expensive for you. So we'll talk about how to lower your medical insurance costs. But before that, I want to share three resources created by friends and uh, readers of freefincal. The first is let me see. The first is, this is a webinar by Deepak from plancover.com. This is a webinar on how to select a health insurance policy in 2019. Watch this video, it will help you understand the basics. And then there is a what I published just today. This is a free ebook on health insurance by Venkatesh Jayaraman. He had shared it in his Twitter account. He was kind enough to share it also for freefincal viewers, readers. You can download this book. I'll have all the links up here or in the description box. And also in June, Lakshmi Narayanan, K.R. Lakshmi Narayanan had shared a health insurance spreadsheet where he had taken pains to list all the important features, mark them as red, orange, and green in terms of favor, and it can be used to screen for health insurance products. So there are some wonderful resources to select a health insurance policy. I would strongly suggest you download them, play with them for some time, play with the spreadsheet for some time. I mean, read the ebook. Ebook should not take you too long. It's a very nice ebook. It will help you understand the basics. Deepak's webinar will also help you understand what to look for and what not to. Then you can play with Lakshmi Narayanan's spreadsheet, which is very extensive, and get a feel for the important factors, what will work for you, what is suitable for you, and so on. So that's that. Now I'll talk about how to lower your medical insurance costs. Some of what I will say will be controversial and probably be against conventional wisdom. But sometimes when you don't have money to pay for a good, proper, full-featured policy, you have to do some cost cutting, and that's what I'm going to talk about in this video. So recognize that health insurance is a game of probability. That is, the insurer is taking a very calculated risk based on the low probability of a certain occurrence. So for example, if you take life insurance, the life insurer is assuming that if I issue 100 policies and that's my insured pool, not all of those 100 people will die on the same day or within a few months or even within a year or so. Their deaths will be over a period of time, maybe even decades. Some of them may not even die, and that's the calculated and I would say it's a risk, but it is supported by reasonable evidence that something like that doesn't happen. Of course, if those 100 people are going to be in the same place, same city, then something like an earthquake or a flood could happen and something like that. But they are not, right? They are all spread out around India or maybe outside. So that risk is quite remote. So as long as the risk of something bad happening is low, then you can drop some features out of a policy and pay a lower premium. So for example, in the case of a term life insurance, you can assume that I don't need term life insurance after age 50. That's a very reasonable assumption, especially if you are having a proper goal-based financial plan. If you are investing enough, you can assume that by 50 my net worth will be well above my term insurance sum insured, and I don't need it anymore. That's a reasonable risk, and it's, I think, well calculated. Of course, if you say I don't need my term insurance in 5 years, within the next 5 years, then that's a huge risk. Or if you are just 30 and you say I don't need term insurance after 45, that's also a bit of a risk. But I think 50 plus, I think it's okay. 55 or whatever you want to call it, at best 60. Beyond that, there's absolutely no need. Now you have all these lifelong policies up to age 100 policy. What nonsense! It's just making you pay more premium. So that's what I mean by a reasonable and calculated risk. There are many such in health insurance. So I'm going to give you some examples. For example, you can say that, look, I'm going to buy myself a single plan for 25 lakhs, and I'm going to assume that anything above that, if it happens, it's going to be rare. But if it does happen, I'll try to manage it with my pocket. That's a thought process. I mean, it's a bit of a risk. There is a risk in it. Deepak will tell you many cases where you're seeing a lot of 50 lakhs, 40 lakhs, 30 lakhs kind of expenses. So that is a risk, but that's one way to think. And if you don't like that, I will give you another example. So suppose I have three people in my family: myself, my spouse, and my child. I can opt for a floater policy of 20 lakhs instead of an individual policy of, let's say, 10 lakh each. I'm just assuming that within a year where the 25 lakh limit is allowable, is applicable rather, within a year, not all three of us will get hospitalized, and the total hospital bill will not be more than 25 lakhs. That's an assumption, and that's a risk I can take to lower my medical expenses, my health insurance premium cost, because an individual policy will be more. Three individual policies is likely to cost more than a floater policy. So and I think that's a reasonable risk. So that's what I mean by that. You can play this game of probability too, and assume that certain situations are less probable. Or you can even, for example, if you take a super top-up policy, you can say I'm covered under employee health cover, group insurance cover. If I'm given a pink slip, I will go and approach my organization and convert that group cover into an individual cover. So I'll just buy a super top-up. That is one way of thinking, but that may not happen in reality, because there can be severe problems, and you may be thrown out in a hurry, or it could be there can be a scandal, and you may be wrongfully accused, rightfully accused, who knows. So there are many circumstances where it will not pan out. Or normal quitting or retirement also, you can convert it. But if you convert it, there are bigger problems, because there will be some conditions imposed on your individual cover by the group insurance provider. I have a guest post on how this conversion from group policy to individual policy, that is employee policy to individual policy, worked out. So that is a risk, but that's an option that you can take by saying, I don't have enough money, I'll just buy a super top-up. Why is super top-up much less expensive than a normal plan? In a normal plan that costs 3 lakhs, 4 lakhs, 5 lakhs, the insurer knows that the probability of a 3 lakh hospital bill or 5 lakh hospital bill is much higher than a 15 lakh hospital bill. That is why the super top-up, which kicks in beyond a certain limit, is significantly less expensive than a normal base cover plan. So you can say, okay, I will just buy a super top-up with a 3 lakh deductible. So which means that if the cost goes above 3 lakh, the super top-up will kick in. Below 3 lakh, I will just spend from my pocket, or I will have my group employer policy. And that's a very good way of thinking, in my opinion, because at best you're going to lose 3 lakh at any given point of time. Since you have only one super top-up policy, you can invoke that, and you can invoke cashless in your super top-up, because usually when you have a base cover with cashless option, and your super top-up with cashless must be from the same insurer, otherwise you will have problems. You have to pay and then only get it reimbursed. If I have only my super top-up, then I will just pay that 1 lakh, 2 lakh out of my hand whenever hospitalization happens, and I can use hopefully I can use super top-up cashless. That's one way of thinking, and that's a risk, and it's a reasonable risk, in my opinion. Of course, if you are sick and if you are prone to getting hospitalized repeatedly, then you have to pay 3 lakh or 2 lakh, whatever it is, again and again. But then it's a big problem. But if your net worth is significantly high and it's small change for you, that's okay. That's okay. No? You can have a super top-up of 1 crore or whatever, the highest that taken off you. So I've looked at that. Let me see. Also, you can say, I can have a 10% co-payment option in a base health cover. You can say, look, I will pay 10% of the costs, you pay 90% of the cost. That will also reduce your health cover cost. That's a chance you're taking. I mean, your liability is limited to 10%. As long as the for a justifiable claim, the insurer's liability is limited to 90%. So that's, in a way, that's also reasonable risk. Then you can say that, look, I'm not interested in all these OPD benefits. Some policies, one or two policies may have OPD benefits, outpatient benefits. I don't care, the cost will be higher. And some people make a big deal about this Ayush. I want Ayush treatment, I want Ayurveda, I want homeopathy to be covered. Please think, if you are having a serious illness like issues with the heart, issues with the bone, issues with with any major part of the organ, all this Ayush will not help if you are going to be operated upon. If you, then you have to follow Western medicine, and then you will have to be following the normal course of Western medicine instead of this. Then in such circumstances, why do you want Ayush cover in your health policy? You pay for it. You may like Ayush, that's fine, but you pay for it from your pocket for all these treatments. They shouldn't cost too much. So I don't see why you should have Ayush in your health cover. I think it's a way. The point I'm trying to make is, if you can afford it, go ahead. But if you cannot afford it, this is one way to cut down costs. And please recognize, at any given point in time in the future, the Ayush benefit can be removed from a health cover. The insurers can say, I can no longer support it. Or they can say, because you have all these additional covers, I'm going to make the fee higher. So, with the premium higher. So, please, I see that as an unnecessary benefit. Another thing is, people say, I want a policy with maternity benefit. How many kids are you going to have? Come on, just pay it from your pocket and have a policy without maternity benefit. So there are many such features that you can say, I don't need this, and therefore I'm going to lower my premium bill. So that is the reason why you should look at all the features, all the terms and conditions. And just like it's very important to read the exclusions, the clauses, the caveats of a policy and so on, it is also important to look at these things. Or what are the extra benefits? Is there anything more? Suppose I have this so-called what is this restore benefit and so on. Am I paying more because of this restore benefit? That's what will happen usually. So I don't need all these restore benefits. So you can reduce your costs as much as possible initially, so that you can manage later on because of age-related increase in premium, and also lack of profitability related premium. All insurers will have profitability problems. It's a terrible business to be in. Therefore, you will end up paying a lot of premium. Over the next 15 years, 20 years, your premium will increase. So you have to be a little careful. Of course, one can also argue that I can choose a policy with room rent sublimits and pay less premium. In that sense, that's a bit of a risk, because over a long term, if you have a large cover, you may get away with it for about 10-15 years, but over a long term, that will come back and bite you. Then it will be a problem. I'm speaking from personal experience in this matter. I've talked about it. So there are certain risks like this, where inflation will play a role, or where after 10 years, 15 years, will come back and bite you. Those kind of risks, please don't take. But features like Ayush, maternity, etc., you can get away with it. You can even consider just a super top-up alone with a low deductible, let's say 2 lakh, 3 lakhs, whatever is low, you can consider it. Sometimes you can even talk with the insurer and try to get a slightly different policy adapted to your needs, if they agree. They may not agree, they will act like it's not available. That is available, they can give it to you. But you have to just be convincing enough. So that's what I wanted to say in this video. Please access these resources. Please think about what I said, whether you agree or disagree. Of course, if you can pay, go ahead and pay. It's good to have those. I'm not saying no. But if you cannot pay, if there's a cash crunch, because you have to. See, health insurance is not your only expense, right? You have to invest for retirement. You have to invest for your children's education. You have to pay term plan cover. You have to pay other things like car insurance, etc., etc. There are so many things. So among all this, you can try to keep this down. It might work if you're having problems with your cash. So take care. Bye-bye.